Welcome back, folks. I've recorded a trade for you. You've been asking me to do live, YouTube streams and all kind of stuff, and I'm not going to do live streams. I've got a business to run, okay? I'm here to focus on my trading, and I'm not a signal service provider. That's not something I want to do. I want to teach you how to reprice, okay? It's a mistake that I made when I was learning from Michael, ICT. He would kind of forecast future price movement and set these targets, and then I would go and try and trade those, and I learned nothing from that. I didn't understand why I was putting the positions on. I was simply following what Michael was saying in terms of here's where the market's going, not knowing the times to enter, why to enter, position sizing, risk management, none of that. And I found that it was probably the biggest mistake. So having learned from that, I know that the best way for people to learn is to study the charts, okay? So the next best thing for me to provide you to enhance your learning experience is to record myself doing a trade, and that's what I'm doing, okay? That's the best I'm going to do for you, because I don't want you following me, putting on trades with real capital, because I don't feel that, gold is a very volatile market, okay? It's a risky market to trade if you don't know what you're doing, okay? So it's for that reason I don't do live video streams, but predominantly I want to focus on my trading. That's my business, okay? I need to be focused and monitor my trades in real time, because I trade with size, as you've seen, okay? It's not a game. There's real money on the line, okay? So anyway, for this trade now done and dusted, okay, I've recorded it, and now I'm coming over it with my video editing tools and just narrating what I was looking at, okay? So the first thing I wanted to see was that dump down, which you can see on a 15-minute chart. That's not shown here. You can go and look at a 15-minute chart. You'll see we've had a nice dump down, okay? We've had 4 15-minute candles dump down, all prior to 2:30 a.m., okay? So in that manipulation hour of London, as I speak about, we've had a big, massive dump down, and that's what I want to see, okay? If I'm looking for a long, I want to see a dump, right? I want to see a dump for the pump, okay? Now, what that means is we are positioning ourselves, right? I'm positioning myself to be a buy at the low of the day, okay? That's what that dump means, because it's dumped down to the low of Asia, okay? And that's where I've got this liquidity line, okay? This is a 4-hourly low that I want to see get swept, okay? And now this could keep going down for the rest of the day, okay? I don't think so, because from my analysis video earlier on in the day, the higher time frame 4-hourly chart indicated bullish order flow. So I've got a couple of things on my side. My bias for the day is bullish. Okay, I'm seeing a dump down. We're at the low of the day. We're taking out a 4-hourly low candle, which is liquidity. Okay, now I'm kind of looking for reversal on this 1-minute chart at a key time. Okay, we're still quite some distance from 2:30. There's still 20 minutes to go, and that's okay, right? They're not always going to provide an entry, on a silver platter. So you could get entries at the new hour. This is the new hour. This is the second hour of London, and we could get a setup in the first 15 minutes. We don't. Okay, we get a setup in the second 15 minutes prior to 2:30. So that's something that I want to highlight, that you're not always going to get a setup at the exact time, because they're not going to give it to you at the exact same time every single day. Otherwise, everybody will be a millionaire. Everybody will be a millionaire, okay? So you've got to kind of be looking at the market at those times, right? After 2 a.m., and you're looking for the best time, in my experience, is at 2:30, right? In that 30 minutes within that second hour, okay? So here we've now come below that 4-hourly low. This also entices breakout traders who enter shorts at the breakout of key times, right? Hourly breakout traders, 4-hourly breakout traders, right? That's what this move down is doing, as well as stopping out any existing long holders and or balancing out any open fair value gaps. So there's a reason for the market to come down, okay? And this manipulation, while it is a manipulation, like getting people to short and getting people on the wrong side of the market, it's also an objective that the market's trying to fulfill, which is to balance the level of inefficiency, okay? Take liquidity, all right? Stop out existing long holders, okay? So even though it's a manipulation, there is a reason for the market to come down here and do its job, okay? So we've got about 3 minutes before the next 15-minute candle starts, okay? And you'll see that we start to kind of get a reaction, okay, at around about this time. And I enter the trade, you'll see, I enter the trade prior to 2:30. And that's a good lesson here. It's a very good lesson, and I'm glad that this come up, because you're not always going to get it, as I said, at the exact time you want it. And so you've got to kind of understand price action, okay? So here we're getting a nice reaction, and this becomes a balanced price range, because you have a single down candle and a single up candle, okay? And this also is that 3-bar pattern that I like to see, okay? All this is happening before 2:30, and that's okay, because what I want to see, I have seen, which is take out the 4-hourly lows, that liquidity, okay, and show some kind of indication that we are reversing, okay, after seeing this dump, right? A 1-hour dump. 4 15-minute candles, or 3 15-minute candles, a 45-minute dump is also fine. Okay, in this case, we had 4 50-minute candles dumping down, taking out the low of Asia, right? And I haven't entered anything yet, but I'm looking at this point in time, and I'll note it down on the chart, as you'll see when I do enter, and exactly why I enter. I'll show it to you, okay? And we've still got about a minute to go, so at this point, I'm just watching the market, okay? I'm looking to see. This is now forming a fair value gap, right? In that last 2 1-minute candles, we've now got a fair value gap. And I'm looking to see how the market reacts inside of that fair value gap. I'm looking to enter. Okay, I'm watching the clock as well. This could also be liquidity to go down for the next 50-minute candle, okay? So this is where I'm now interested. I'm looking to go long because I see this balance price range. I see a fair value gap formed. And now I'm just watching, okay? I'm watching the market. No need for me to rush because the clock is something else that I'm also looking at, okay? So I'm doing everything live here on the charts on TradingView and writing out in the text on TradingView so that you can see that this is a live trade. And you can see that I capture the exact low, okay? I specifically type out exactly when I go long on that trade and catch the low of the day. Now, it doesn't always work out like that, okay? Sometimes I have a better drawdown, and that's okay. Well, I'm not here to get the best entries or the best exits. I'm here to get a good amount of the range within a session. That's my objective, not to get the best entries or the best exit, is to capture a good amount of the range within the session, okay? Because I trade with size, and that's why I trade with size. I want to be in and out of the market. Something else I want to point out here is the way that this has come down is a crawl. Very, 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 very choppy, right? You know it's not choppy because it's not an impulsive move down. So that's how you kind of know the market's crawling down to reach for something. So I'm pointing out that the next 15-minute candle has started. We're still not at 230, but we're close. And as you'll see, I'll take a long before 230 because I see the setup that I need to see, okay? I see that the market's starting to hold, and then I look at what else on other time frames can I see that's indicating why the market is holding at this price, okay? Here I'm trying to kind of work out what's the potential range for where I want to take out, take off the profits, and to the midpoint up above the yellow line of another 4-hourly rejection block, and I'm thinking that's where we are headed, okay? And I definitely want to target above where the dump started because we didn't dump for no reason, so we'll get above the dump. That's a minimum target. So now I'm switching over to a 5-minute chart because I want to see where has this come into on the left-hand side, because we're seeing that the price is now holding, and I want to see, is there something on the left, like a fair value gap, that this has come down into where we might be getting this reaction, because I can see that we're not going any lower anymore. We're in that 15-minute candle, this is the new 15-minute candle, and I can see there's a fair value gap, and that's what's holding price. So right at this point, I like what I see, and I add a 5 light, and I also type that down there so you know exactly when I've added the 5 light, okay? And I'm now long 5 light at that level, inside of that fair value gap on the 5-minute chart. We've had a nice dump down. Now I'm thinking about where do I want to take this position off. I want to capture at least 50 to 60 pips from the low of the day. So I'm just measuring to see what level do I want to take this trade off. There's obviously some key levels, like which high. I'm looking at which high do I want to take it off, okay? Not before the dump, but somewhere above the dump. Where can I have a level of an exit that makes sense, logical, and in terms of a range that I want to capture, okay? So as I said, I'm long 5 lots from that level. I'm first thinking maybe in that 15-minute rejection block. I kind of am marking that out to see if that's where I want to see this market head up to. And I think it will head up to that, okay? But that doesn't necessarily mean that will be my target, okay? Because I want to be in and out of this fast, right? I don't want to hold on to this for too long. And I know that I want to definitely get above that where the dump starts. I'm just measuring that, and that's a nice 50 pips, okay? So even if I just go back up there, I've captured my 50 pips, okay? And so I want to go a little bit above where we've dumped down from. So I'm just measuring to see, where is that level and where's that level? That's a midpoint of that 4-hourly rejection block. So I'm going to be targeting just that level above on the green line there, 2504, which is just a little bit above where the dump started, and that's enough of a range for me to take off. And you'll see that we actually get higher above, closer to that midpoint of that 4-hourly rejection block. Okay, so now we're back to a 1-minute chart, okay, and I like what I see, okay, so we're seeing that gap that was created is now holding, okay, and we're in the second 15-minute candle. I am mentioning here that I've entered early, before 2:30 a.m., and that little low there could still be liquidity for 2:30 to sweep down into, potentially, right? I'm just marking that out because I need to be aware. I'm always thinking what's possible because we haven't hit 2:30 yet, but I like what I see here on the chart, and we actually do get nice movement and displacement. We're back inside, once we get back inside the range of that 4-hourly candle from where we swept the lows, here I'm just mentioning that I've captured the low of the day, and then this moved nicely because now we're back inside of the range of that 4-hourly candle. So we've swept the lows and balanced the market on a 5-minute chart, okay? We've taken liquidity, stopped out any existing long holders, and now we move in the direction this was supposed to go, okay? Just marking out that there's equal lows above, but the target is higher at 2504 and above, okay? So this trade actually works out quite well, and the purpose of me recording this live for you and just now talking through what I was thinking is just to show you how I trade. You've been asking me to do live streams, and that's something I'm not going to do, okay? I don't provide signals. I'm here to provide you education on how to read price, okay? So as you can see, we've got nice displacement now, and the market's moving quickly to prevent anybody that's already short from adjusting their stops, okay? So you can see it's reaching for those equal lows. You can see that was a chop, and that chop was simply to come down to an objective, and you can see we go straight to the target. Very easy, straightforward trade. All I'm doing here is looking for the dump for the pump, okay? That's all this strategy is about, looking for the dump for the pump or the pump for the dump, and applying some basic ICT concepts, looking for those signatures at key times, looking for key levels, okay, liquidity, and understanding and identifying order flow using the higher time frames, okay? So I hope this video is useful. I will now talk with you in a future video.